we go, everybody. It is Tuesday, March 3rd. Oh boy. Oh boy, what a day. The Fed. Can I say panic? Panic much? Fed? Panic much? Jerome Powell? Because that's what it was, folks. Look, you know, let me just start off right by saying, and I've said this before, let me just start off by repeating myself. I don't know, this might be the 20th time I've said this, but this Powell Fed, this Jerome Powell Fed, this is the weakest Fed I have ever seen. I've been in this business for 40 years, all right? And I've seen, you know, I was there with the Volcker Fed, I was there with the Greenspan Fed, I was there with the Bernanke Fed, I was there with the Yellen Fed, and now I'm here with the Powell Fed. And I said this before, this guy is he should not be chairman of the Fed. Now, I'm not saying that a rate cut was unnecessary. Maybe it was, maybe it wasn't. I'm going to talk about that in a second. First of all, they have a meeting coming up in 2 weeks, okay? On March 17th was their FOMC meeting. So far, right now, all of the data, well, look, let's just take, for example, the very data that the Fed itself puts out every single week, which is the financial data, the banking data. Now, you know, if you're a subscriber of my report, because I go through this every week in the report in detail with charts and numbers and growth rates and everything. The very data that the Fed itself puts out, it compiles this data every single week, does not show the slightest inkling of an economic slowdown. As a matter of fact, the loans growth has picked up. The nominal level outstanding of loans is at an all-time record high. Deposits at an all-time record high. Bank assets at an all-time record high. Growth rates for these things have picked up. Consumer loans, real estate loans, commercial and industrial loans, even, which had been in a plunge now for the last 8 or 9 months, that picking up. So now this is the data that the Fed, the Powell's Fed puts it out. They compile this data. This is, if I can get it, they obviously can get it. So there was nothing in there. Now, as a matter of fact, this is a little bit part of my hesitation. I know if you're with me as a subscriber, you might sense that I'm a little bit, hey, you know, it's going down, but you know, I'm a little bit on the fence because some of this data is still looking pretty good. It would show up in credit demand. It would show up in things like gasoline demand and distillate demand and exports. It's not showing up in there. I'm not saying it won't. Okay? But a couple of days ago, by the way, on Friday, last Friday, the Fed officials, and Powell, I think, was one of them, who said, hey, we're cool with leaving rates just where they are, you know, for this year. And we'll see what happens. We'll see what happens, the development of whatever impact the virus has. We'll see what happens. But right now, we're cool with, and boom, today, 50 basis point cut. Now, first of all, I'm not saying that it's unnecessary to cut rates, but cutting rates does not combat the virus. Cutting rates does not create, poof, a vaccine out of thin air. I mean, come on, seriously? And this was a total panic move, which it doesn't surprise me that the market sold off hard. I mean, at one point we were down 1,000. I don't know, we're off of those levels now as of this recording that I'm making right here. And I don't know how we're going to close, but what a move. Powell should not be in charge of the Federal Reserve. Period. Hands down. This guy, he's a securities lawyer. He doesn't understand monetary policy. He doesn't understand fiscal policy. He's clearly not an MMT guy, because remember, it's like, oh, that stuff, that's nonsense. He just like casually dismisses it, has no understanding of it, talks ridiculous crap about, we're not going to be able to finance the debt, and we got to rein in spending. All these ideas that are just so out of paradigm to the current reality of the way the monetary system functions. It's unbelievable. And when you think about the Fed, which is a monopolist when it comes to rate setting, they set the rates. The market doesn't set the rates. The Fed sets the rates, and it has unlimited power to set rates at any point along the term structure, anywhere that it wants. I mean, this Fed has just been a sheep following the markets, whatever the market dictates. And if we were to conduct policy like that, we've seen these manias in the markets where people believe, oh my God, it's the end of the world, and hey, guess what? It's not the end of the world. Or we've seen these manias where, hey, we'll pay any price for a particular security or valuation of the market, and guess what? That doesn't jibe with underlying conditions. So we've seen all this. We've seen the housing crash and things like this. So this is just really, really bad, all right? Now, let's talk about conditions. First of all, I said yesterday in my video, I'm not buying this rally, all right? And you saw what happened today. Now, I think we're going to chop around here for a while. Again, I'll be honest with you, I got to see some more data. I think right now it's inconclusive. I mean, there are most of the stuff that I see, and I just mentioned a whole bunch of things having to do with bank credit, loans and leases, bank deposits, bank assets, bank capital, all the things that you think you'd see suffer or contract, or at least a growth slowdown in negative economic conditions or slowing economic conditions. That's not happening. You're not even seeing that in gasoline demand. You're not seeing that in distillate demand. You're not seeing that in crude and product exports, which would be, I guess, a barometer for external activity outside the United States. We're not seeing that either. But then there are some things, like I've been following unemployment benefits. That's a rising trend. I spoke yesterday on the video about automobile loans, which they're rolling over, not in a nominal sense. They're an all-time high at a nominal level. In other words, the amount of loans outstanding, but the growth rate has plateaued and looks like it's kind of rolling over. Now these are, maybe little niche indicators, although I don't think unemployment benefits are a niche indicator. And by the way, we're going to see the jobs report on Friday, and tomorrow we get a little hint of that, maybe with the ADP report. But man, I mean, look, if you've been following me for any length of time, a while back I said, we're going to end up going full Japan. Last year when he reversed course, again, Powell, on rates in, in January of 2019, and he started cutting rates in a panic. Again, that was a panic reaction to the market correction, the stock market correction at the end of 2018. Remember that stock market correction? And I had so many people, subscribers, and by the way, my subscriber rolls are way up beyond where they were there. And people are paying more money for it, and they're happily paying more money for it because they're making money. But I had all these, Mike, you told me to buy, and it went down below the level where you told me to buy. And well, what were we at? 2,700 on the S&P? 2,700 on the S&P? And where do we go to? 3,300 on the S&P. And you told me to buy at 2,700 and it went to 2,650. You told me to buy at 2,800 and it went to 20. I don't concern, that's a whole separate thing. But Powell cut the rates on that. And then the Fed cut the rates, 3 more times last year, or a total of 3 times. I don't remember. Maybe it was 4 times. I don't remember. And then they start buying assets again, buying securities, buying treasuries, flooding the whole system with reserves. It's gross mismanagement. Gross mismanagement. And by the way, the fiscal picture, which I've been talking about, which is kind of like looking a little soft, I'm not ready to declare it hasn't hit that inflection point. It's not negative, but rate cuts, what do? They remove income from the economy. They remove it. So right now, when the deficit is literally flat year over year, and we're about to go negative, in other words, remove income from the economy. Rate cuts now, remove income. At a time when things are starting to look a little questionable, and you got the virus, and you got all this potential impact, what are they going to do? Remove more income from the economy. So, I think you got to be a seller on rallies. We had a big drop. It's stabilizing, but I think more drops are coming. All right, everybody. Great news, right? Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Remember, I'm the only one who has an applied approach to MMT. Do it now. Prices are just going to keep going up. Bye-bye.